We have a panel now that's going to be focused on critical minerals, and our moderator today is Howard Klein, partner at RK Equity. Joining him up on stage, we have Gabriel Rubacha, CEO of Lithium. We have Kalisvaart, principal at Hawke's Point, and Alicia, Milne, president and CEO of Q2 Metals Corp.
Thank you, Amy. Good morning, and thank you to the organizers of One-to-One's Mining Conference for the opportunity to join this panel and now give this presentation. And I'd also like to thank ChatGPT for assisting me with the words you're about to hear. As I said, had to prepare this on very short notice. I'm Howard Klein from RK Equity. I write the Lithium Ion Bowl newsletter. I also co-host with Matt Fernley and Rodney Hooper a podcast on Rockstock Channel, which I'd encourage all of you to write down and visit and subscribe to that channel. And it's also available on Spotify and Apple Podcasts. We've been advising lithium and other critical minerals developers and investors for over 23 years. Started this 23 years ago with Robert Friedland's original Ivanhoe Mines in Mongolia as my first client. But I want to set the stage by drawing on my recent Lithium Ion Bowl newsletter, which was entitled Critical Minerals at Warp Speed. Because what's happening now in lithium and the broader critical mineral space is starting to rhyme with that last commodity supercycle in the 2000s when I first met Robert. But today, it has even stronger structural tailwinds. Back then, China's industrialization created a demand shock. Today, we're facing something far more multidimensional: AI and the age of electricity, massive data center buildouts, grid reinforcements, electric vehicles, energy storage, robotics, defense electrification, and reshoring away from China. At the same time, we've had a full decade of underinvestment in new mines. This is a demand shock meeting a supply shock, an environment where strategic stockpiling, government purchasing, and even price floor mechanisms, like those now being discussed in Washington, are accelerating this cycle. The supply chain dimension is new as well. In 2000, governments weren't building strategic mineral reserves. Today, the US, EU, Japan, Korea are explicitly considering stockpiling lithium, rare earths, graphite, nickel. That matters because when governments become price-insensitive buyers, the downside in the cycle tightens and the upside can become explosive. Meanwhile, mining equities are historically undervalued. Pim commented from my recent newsletter that the chart I showed that mining equities as a share of global equity markets have collapsed from 4% at the start of this century to barely 1% today. And that's versus about 10% after World War II. I'll say that again. Mining equities as a percentage of all global equities are 1%. If we are entering a multi-year infrastructure, energy security, and AI capacity build-out, then capital, almost by definition, must rotate back toward mining. So I want to quickly frame a theme from some recent interviews. I just interviewed Jigar Shah, who was the former head of the Loan Programs Office in the US and allocated a bunch of capital to some lithium and other development companies. The U.S. is no longer incentivizing critical minerals merely for clean energy. This is a national security industrial strategy. We are now, and this was demonstrated by Trump and Xi in Asia recently, we're in a G2 world, and Trump even tweeted it. It's the G2. The U.S. and China are building rival supply chains. Friendshoring is no longer optional. It is the basis on which capital will flow. If a project sits in a jurisdiction aligned with the US, EU, Japan, Korea alliance, you're in the slipstream of trillions of dollars of tailwinds. Which brings me to two of our panelists in Argentina and Quebec, two jurisdictions that are perfectly well placed for this supercycle. Argentina remains one of the lowest cost global sources of lithium. NOAA Lithium's and Gabriel Rubacha from NOAA Lithium's maiden resource and PEA crystallized what we've been saying. The brine cost curve advantage is real. And as strategic players like POSCO, who is now completing another acquisition of Lithium South development in Argentina, optionality increases, not decreases. Quebec, similarly, is a textbook example of what the U.S. wants: clean hydropower, rule of law, proximity to OEMs, processing optionality, and geopolitical alignment. Q2 Metals is actively drilling what is the most exciting spodumene discovery in the industry at present, and perhaps ever. It is blessed with very close proximity to North American industrial policy. And again, POSCO, which just paid a hefty premium for a 15% stake in 2 Western Australian spodumene mines and is joint venturing with Mineral Resources, underscore how scarce Tier 1 hard rock projects are. And with lithium prices starting to rally, spodumene in particular, there's significant tailwinds behind the Q2 story, trading at a 52-week high. So as we move on to this panel, I want to frame the discussion around 3 topics. First, this is a structural cycle, not a sentiment cycle. AI, electrification, and reshoring don't reverse. Second, supply chains and spot prices will determine which projects succeed. That means jurisdiction, offtake, financing, permitting, and alignment with strategic partners, which matter far more than the daily lithium price. And third, history suggests mining equities are priced for the last war, not the next one. If we really are at the front end of the resource security supercycle, the rotation into mining-linked assets will be meaningful. And with that, Amy already introduced our panelists here, but I'm going to stand here. I want to start, I guess, maybe with Pim. Why don't you just tell us a bit about Hawke's Point? One thing I would like to reference is that, Wall Street is following Washington. So JP Morgan announced $1.5 trillion in funding, including for critical minerals. Appian just signed a deal, one of your competitors, with the IFC, and Orion, another competitor, is signing a deal with the DFC. So tell us a little bit about Hawke's Point. You haven't been so much focused on critical minerals historically, but how do you see the landscape, from sitting here from London?
Great question. Thank you very much. Where we've carved out a niche is to find pre-production assets and put them into production. And whilst that sounds simple, it requires an awful lot of capital and TLC. And maybe I can elaborate on the latter a bit and make a cross-reference as to why we've, to date, found certain components, segments, subsegments of the critical mineral space hard to deploy into. If you imagine, easy for the audience here, no doubt, when a company is at the pre-production stage, it's run by 12 people out of an office in one of the eco centers typically. And we need to take something like that and transform it into a fully fledging mining operation with hundreds of people. And that transformation, because it is nothing less than a transformation, is where a lot of the TLC happens. It requires a lot of people to come together and a lot of systems to be put in place. Now, that's quite easily done when you have a blueprint and you have access to people in, say, copper, where we have hundreds of mines, each employing thousands of people. So for me to find someone that's got experience in constructing a copper mine and commissioning one and running one, that's relatively easy. And then when we produce the copper, be it in concentrate or other format, we've got a very transparent market. We sell at an end market and don't need to think much further. Where we as investors, not traders, investors have a question in certain critical minerals is that there is not that depth of capital, but especially labor. There isn't many people that I can turn to that can tell me that they've put several graphite or rare earth mines into production. And beyond that, even if they were to, then what do I do with the product? There's not many knowledge here in the West when it comes to producing rare earth oxides. And then when it comes to offtake, we seem to currently only have one destination. We're building a machine as we go, but I can't quite see what that machine looks like. Whereas in copper or in lithium, it is much easier to see that, and it's much easier to see us deploy capital as compared to some of the maybe nichier critical minerals that get an awful lot of the headlines, but where as an investor, again, not a trader, an investor, I'm struggling to sometimes see the risk-return trade-off.
Okay, thanks for that. Pim, I was introducing, I think, lithium companies to you, I don't know, 10 years ago, and you said you couldn't get comfortable with lithium. I don't think you've made any investments in lithium, but you're making similar comments about other critical minerals. I think lithium is maturing, and we have two panelists here about lithium, so I think I'll direct the conversation to be more about lithium, because some of the things that you were talking about, you do have case studies of companies that actually have brought things into production, and Gabriel was working as the head of Lithium Argentina's operation as one of those who have helped bring a greenfield project into production. So there's a lot of your comments, I was just thinking like a difference between like PE and venture capital, right? So a lot of these critical minerals, you do have to take some kind of venture capital risk, and there's lots of venture capital like upside associated with that risk. So Gabriel, why don't you just tell us about NOAA Lithium and why your previous track record at Lithium Argentina makes you well placed to replicate the success there.
I mean, hello. We're trying in NOAA to replicate, our experience in Lithium Americas. My partner also comes with some experience with the lithium space from, he represented Ganfeng. There is a lot of experience in Argentina in lithium, and we're trying to replicate in NOAA. Developing a lithium project is not easy. It's not the same as developing a typical mine. It's more a chemical project rather than a typical copper, as you said. And we have to understand that we are dealing with a chemical. We are talking about brines, not hard rock, but it's a chemical process. At the end of the day, the only thing that we got similar to mine is taking the brine out of the ground. The rest is a chemical process. And so we are trying to bring out their experience from my experience. Putting the Minera XR, that is a joint venture between Ganfeng and Lithium Americas, into NOAA. And so far it's been successful, and it took a lot of time, and you know quite well how long it took to start construction for Minera XR. I think it was more than 10 years. In NOAA, we started the company in 2023. We listed the company in 2023. In 1 year, we got a maiden resource. In 2 years and a half, we got a PEA, and we plan next year to get a PFS. And according to our plans, in less than 5 years, we plan to start in construction. That is our timeline. So that is experience that we're trying to bring into NOAA. It's not easy, but we believe that the experience that we're bringing from the previous projects in Argentina, the development of projects in Salta is very important. To choose the right jurisdiction. It's not the same in Argentina. The resources belong to the provinces. So it's very important to choose the right jurisdiction. It's not the same to build a mine in Salta than in Jujuy or Catamarca. So find the right jurisdiction is very important. So all these ingredients make us believe that we are adding value and trying to replicate what we did in the past.
Okay, thanks for that. And Alicia, you're new to the scene, but Quebec is a lithium producer relatively recently, or well, in the past, and now we've had the restart. Just tell us about Q2 and both. Alicia is a conventional hard rock story, and Gabriel and Noah is a conventional brine. So, yes, it is a chemistry industry or chemical, specialty chemical, but you're not using first of a kind technology. And but for pure mining investors, what Alicia you're doing is drilling holes, and you're pre-resource. And Pim, you look for, I guess, beyond the exploration to kind of bring things into production. A lot of money is made at the drill bit, as Robert Friedland taught me, and that's where Q2 is currently at. So yeah, go ahead.
Yeah, for sure. So we have the Cisco Lithium project in Quebec, and yeah, if you told me a year ago when we first acquired the project that we were going to be sitting here on a panel, I would have said you're kidding. But it's been a quick year and a half since we acquired it. It's proving up to be quite a large mineral resource, which we are currently drilling towards, and it's been a very quick process. Like you were trying to get a resource on it within the next couple months here, and then straight into PEA, and then see where that takes us. So fortunately for us, again, jurisdiction, we're in Quebec, and that's a very proactive mining jurisdiction. And, the governments of Canada and Quebec are both talking the talk right now about putting more money into critical minerals to be onshoring it and to develop more of the North American supply chain. So hopefully that bodes well for us as we move it forward.
So I want to talk about the geopolitics a bit and the country specific. A couple of days ago, America and Argentina signed a framework agreement, and that follows a framework agreement that America signed with Australia and then also separately with Japan. I was speaking with somebody or listening to a podcast or something that's basically saying Quebec is the easiest, and that's going to be the last. Going down the list, and for whatever reason, there is a lot of back and forth between Trump and Canada, but you do have a new prime minister, so that was also something that took place this year. But I guess, Pim, how do you think of, like, a lot of investing these days is what companies are going to get, like, kind of U.S. backing, right? And it's influencing, the stock valuation. So how do you think about that component? I know you're an investor, not a trader, but
Yeah, that was going to be my first comment. I think where I, as an investor, see the true value is not so much in the capital getting allocated by state enterprises, and I think in both cases, this is very, very true, be it Argentina or indeed Quebec. It is how governments have woken up and realized that besides capital, permitting is another huge hurdle. And I remember sitting at this same panel in the other room 2 years ago saying, permitting is the one thing that holds this industry back. And I think that is the tangible change that I'm really excited about. The money is welcome, but I think there is a lot of private capital available and public capital available if you can show a pathway through permitting. And that's the real change in tone that I feel will set this up, not for a small success, but for a long success over a longer period of time, rather than just something that is flavor of the month and then people move on. So that's the one bit that I'm very excited about, and that cuts across all the jurisdictions you've discussed.
okay. Gabriel, do you want to talk about Argentina and U.S. politics, Milne, and what's going on there?
I believe that we receive a strong support from the U.S. in the recent weeks, months. I think that that is going to be very good for the country. We still got a lot of things to do in terms of, in general terms. The next two big things that are going to happen in Argentina is the labor and tax reforms. That is going to be transformational for Argentina. But in general terms, what we are seeing in Argentina, that is some change in the mining space. Big players coming to Argentina. I'm talking about lithium in particular, with Rio Tinto coming to Argentina, but also BHP getting to Argentina. That is, it's very important that BHP announced a return, or at least the return to Argentina, but also Glencore announcing that they're going to invest 13 billion in Argentina. So mining is becoming very important in Argentina. Now we have to see if the U.S. is really doing something. The U.S. is lagging in terms of investment in Argentina. I'm talking about lithium in particular. China is leading the effort in Argentina with a lot of investment. So we have to see if they're really, with these agreements, with this support, the U.S. is now really trying to do something in Argentina.
Okay, I mean, my observation is that the U.S. has definitely woken up. I mean, under Trump 1, he made some permitting reform. Then under Biden, it was all about EVs and climate. And now, she, rattling the saber a second time, and the rare earths on October 9th has really, other commentators, and I agree with this, basically, pushed a little bit too far, or pushed, overplayed the hand. But what it's done is it has catalyzed, again, this warp speed, America, very focused. They just signed an agreement, for a tungsten mine in Kazakhstan, which was widely sought after by China. So to your point, Gabriel, that China has been very active in Argentina, the fact that they just signed this kind of framework agreement is part of this whole of government warp speed. You're going to see it's an American Belt and Road. They're meeting China in a lot of these places. But one place where China has been less welcome in recent years has been Canada. So any comments you can make about the political environment, Alicia, just from Canada, U.S., yes, you're very proximate here. One thing I would say, actually, before you answer that, is one thing that I've seen, or haven't seen so much of, but I'm hearing you're going to hear a lot more of from the Trump administration, is being pro-batteries, right? Because they've been anti-solar, they've been anti-wind, they've been anti-EVs, but they're realizing that to win the AI race, behind the scenes, you're going to hear more about batteries coming from the government, and therefore the need for lithium. And then I think you're going to start seeing that, plus a warming toward Canada. I put a joke. I created a meme in ChatGPT that showed Trump and Carney, doing a Trump dance, under the USMCA instead of the YMCA. But anyway, that's just my comment. But Alicia, any thoughts on that from your perspective?
Well, I think the more that you use ChatGPT, the more AI is involved and the more battery storage systems that you're going to need, because you need the battery power to power the data centers, to power all the things that are electrified now. So yes, Canada is ex-China. We don't take any investments from China, which then opens the door to the States, to Australia, to other jurisdictions to invest in us, especially in spodumene lithium. Like, there's all sorts of Australian interest in the deposits in Quebec. Where that goes, to be determined. I mean, Carney talks a talk, and one of his election platforms was reforming permitting. To be determined how that ends up playing out. But I think the more focus there is on mining in Canada, the more there is on critical minerals and just opening up mines, making it easier, streamlining it. Anything you can do to get access to those minerals easier is to everybody's benefit, really.
Pim, do you cover Rio Tinto much?
No, I don't. I do not.
Okay, I'm just, because they made a big investment in lithium, and December 4th, the new CEO is going to be, or new CEO is going to be articulating his strategy, and there's some speculation as to what he's going to say vis-a-vis his lithium business, which is in both Argentina and in Quebec. So, all right, you have no opinion on that, I guess.
And it was in Serbia until they got put to care and maintenance.
Yeah,
yes.
they canceled. Yes, they canceled that. Okay. Anything else you'd like to talk about, Pim, just more broadly? I know this is someone was saying like gold is a critical mineral, but on one of the earlier panels, and I was kind of thinking like, well, you know, the U.S. just expanded by 10 metals from 50 to 60, you know, and they included silver and met coal. So I was just like, you know, if everything's critical, then nothing is critical. But
Yeah, the most
what do you
critical-
think?
The most critical one to me that cuts across all those mega trends that you've mentioned, be it defense, be it the electrification, robotics, space exploration. There's a new one that I heard the other day. It is all requiring copper, and whether that copper is generated by solar or wind or otherwise, it's still, the electricity is generated via solar, wind, or conventional. It all needs to go over the same copper wire. So that's the one that, you know, I can see benefit from this these series of mega trends. And then certainly for pockets where people are willing to invest in creating an eco-center, like in Quebec, where they will create a critical minerals hub in
In Bécancour.
Thank you. Places like that are forward-looking, that are looking through the vertical integration and creating a whole see-through system, I think are standing to benefit and can stand on their own legs, notwithstanding what you say about how close it is to the US. I think they're very smart in making sure that they are open to, but not dependent on. The same you see happening in Australia with Enetabe and the lithium refineries that they're building there. So I think countries are really looking at where their strengths are and exploiting those. But within those, if it's not on the basis of that, then I think copper is a great way to get exposure to it without, you know, being pigeonholed into one segment of the critical minerals.
Which copper companies is Hawke invested in?
We're invested in AIC Mines, amongst others. Yeah.
AIC Mines. Okay.
Yeah.
And
It's a
that's
copper producer.
Australian listed.
It's
right?
an Australian copper producer that is doubling its throughput, putting a second mine into construction to feed that. So that's been one of our investments. For completeness sake, we have a joint venture with Wesfarmers in lithium. So we are exposed to lithium in Australia, and Wesfarmers to us is a great partner. They discovered Mount Holland, as I'm sure you know, and
They acquired Mount
running various lithium processing plants. So again, we feel that is a great way of getting exposure to the sector. So that's how we look at the world and
how
try.
does that joint venture work? Because Wesfarmers bought Mount Holland, or bought Kidman Resources, which owns
They have a
Mount
joint
Holland.
venture whereby any of the lithium that they find on our ground, they get to prove it up through to feasibility study, at which point, you know, we have a choice whether we want to keep going or sell it to them.
Okay. That joint venture is through AIC or through a separate
That's a
company?
separate entity.
Okay, that's a private entity? Okay,
Yes.
okay, great. Always learn something new. So I had no idea you had some early stage lithium exposure. Okay, interesting. Okay, Gabriel, so you just published a PEA. Why don't you tell us a little bit about that PEA and what the path is, from here to get that financed, more advanced than financed?
Yeah, we just announced PEA a few weeks ago. It's based on 2 stages of 20,000 tons each for a total of 40,000. The fact that we got almost 5 million tons LCE with 525 milligrams per liter concentration allow us to get the PEA based on evaporation, minimizing the risk for the development of the project. So allow us to have a low capex and low opex, and both capex for the first stage is 700 million and opex below $6,000. And for the full 40,000, we are talking about 1.3 billion and $5,500 for the opex. And very robust economics with the 2 billion NPV and 3.7 respectively for 20,000 and 40,000, and IRR 27 and 28%. So we believe that we got a very good project for its development. There are not many projects still outstanding or undeveloped without royalties and offtakes, at least in the brine space. And our plan is to take it to PFS. The idea is to get this project in PFS next year and continuous development. The project should be in production, at least if everything goes well, in production in 2030.
Okay, and you just raised $4 million, and what's your market cap?
Our current market cap is a little bit below 60 million. We're currently raising capital, and that's why we're a little bit below 60 million Canadian.
And Alicia, you raised some capital over the summer. Why don't you tell us about that and your market cap and the path from here?
We issued an exploration target on the Cisco project in July, and that gave a conceptual estimate of 250 million tons at a minimum to a maximum of 329 million tons at that Cisco mineralized zone. So on the low end, that would put us, I think it's the 6th largest hard rock deposit worldwide. And off the back of that, we raised $26 million of charity flow-through funds in Quebec specifically. So that $26 million allowed us to ramp up pretty aggressively. So now we have 4 drill rigs turning, and again, drilling towards the inferred resource, which is going to come out in the first quarter of 2026. So it's allowing us to get aggressive with what we're doing to hopefully catch the tailwind of this increase in the lithium space right now, which is, hopefully going to be the next big run up.
And your market cap today, you're at a 52-week high-ish.
220 million, I think. Yeah.
220 million, okay. Pim, do you look at prices, or do you have price forecasts? Any sense of, the lithium market? It's woken up a bit. I have some views, but I was just curious if you had any thoughts there.
We look at costs as opposed to prices. We want to make sure that a project has a cost profile that it can withstand adverse commodity prices for a period of time. But really the value is generated in, assuming that that is the case, the value is generated in taking a pre-production asset and putting it in production. I mean, 60 million market cap against a multi-billion-dollar MPV. If you can take a company on a journey to get it to execute well, there's your price. And if you make sure that the cost profile is such, and it sounded like it is, that it can withstand a subdued commodity price environment, you'll still make a very good amount of money, and you might make a great amount of money if you get a tailwind. But even in a headwind, you ought to be able to make not percentages of your money, but multiples of your money. And the same goes with the Q2 project. So focus is on price and having a project that's robust enough that it can be put into production without banking on high commodity prices and the project only working in that concept. So we kind of turn it around and have the eyes on the prize, which is, let's look at what this could be worth when you execute well. That's the price.
Okay. Well, Gabriel said he's raising some capital, so if you think he's low on the cost curve and can kind of survive.
We'll grab him afterwards.
Okay.
Yeah.
Any other metal other than lithium that, Pim, besides copper, that interests you?
It's really about the discount that a pre-production asset trades at that we're trying to capture, and you can play that in a variety of commodities. We also have, as you pointed out, gold exposure, and again, there the same thematic still holds at current prices. As long as you have a project with a robust cost position, you can still see how you can make multiples your money. So I wouldn't say we're completely agnostic, but it doesn't rank at the top, and it doesn't dictate how we invest our capital. The transparency of the end market is a lot more important, as I hoped I clarified, as opposed to the actual commodity. We're not good macro commodity pickers. I've never been. You know that probably better than most. But capturing the value is still possible, even if you don't focus at the right commodity at the right time, provided you back the right project with a good cost profile.
So I asked you on your copper investments, what gold investments do you have?
We have several. We have a group called Orabanda Mining, and then we have one of the most exciting ones that's actually present here called Rox Resources. They just finalized their construction raise, and they're building a mine now, and that should still be a very, very good investment for anyone that's looking to deploy capital.
Okay, I'll look at both of those, and all of you just write down, what Hawke's Point. So Hawke's Point's been, you've been around for, I don't know, 10 years or so?
Yes, we have. Yes.
Okay, and you're just one fund, or have you on multiple funds?
We invest out of a single investment, so it's not set up as a fund per se. It's set up as a how do I best describe this? It's almost a
You recycle the capital. You don't just
correct
use it and then give it back to LP.
And there's one single capital provider, so there's not a bespoke fund in the way that some of our peers might have.
Okay, so Gabriel, you've been through a bunch of lithium cycles. It looks like we're well bid here for lithium. That could be just seasonal. I don't know. Any views that, I don't want to impart my views. We have, you could watch Rockstock Channel and hear our analyst views all the time. But you have gone through a few cycles here when you were at Lithium Argentina and Lithium Americas. So what do you make as the state of the market, pricing-wise?
I mean, price-wise, I don't know exactly, but I believe that this is not sustainable. We discussed this at length. I believe that this recovery will continue. I believe that this is going to be sooner rather than later. What is going to be the price? I truly don't know, but this should be long term. Should be somewhere between 20 and 30. It doesn't make any sense to go back to the 70s and 80s, but with this level of prices, I mean, none of the projects are going to be financed, so there's not going to be projects in the pipeline. So the supply is going to be shorter. The gap in the supply and demand is going to be bigger. So there's going to be there should be an increase in the price. Otherwise, the deficit is going to be much higher. So I do believe that this recovery should continue this increase to a level that is it could be sustainable for the markets, especially with this growth that we see on the ESS. That everybody's going to be talking about ESS, no longer about DB.
Yeah. One thing I should point out is that Argentina has been probably the most prolific area for M&A in the lithium sector. So there have been lots of acquisitions. I mentioned POSCO for Lithium South. That's probably like the smallest one. But from Ganfeng joint venturing, from Rio Tinto buying all of Arcadium, principally for the Argentine assets. But there have been a lot of smaller M&A. Lithium Americas bought Millennial Lithium for $400 million. So the path from like a 60 million market cap company to a potential takeout at 250, 400, 500 million dollars. Neo Lithium got bought. Rio Tinto bought Rincon. Argentina, in my opinion, is just like underappreciated from what Milne has done. Argentine stocks have done well, but Argentine lithium stocks have not done so well. But in Alicia's case, the stock has woken up in the last number of months. So we interviewed you multiple times this year, but I remember we started the year in January at the Vancouver Resource Investment Conference, and it was quite bearish, and it was bearish all the way until June. But since you put out that exploration target, lithium prices have also started to rise slowly, but now more fastly, more quickly.
More quickly, yeah. I mean, acquiring an asset and drilling it and seeing what was actually there in a counter-cyclical market. I mean, much to the detriment of our shareholders, when I first announced that we were acquiring the Cisco deposit, they all questioned if I was sane or not because of the market at that point. But now they're quite happy. So I can't, they're not going to complain too much these days. But yeah, it's, you ask 5 different people and you get 5 different answers on when the market's going to turn. And I think everybody knows it's going to turn. It's just a matter of when. And I think it's going to be sooner than not, same as you. Like, you can't electrify as much as you're doing. You can't have solar coming online. You can't have all the AI without having the storage systems. So it's going to happen sooner than not, I think.
But you bring up a really good, you're reminding me of a very good point. You actually purchased this asset, right? So just buying well, right? Like this is a very large discovery. And a lot of lithium, like 5 years ago, 10 years ago, when I started in lithium, there were just like 4 or 5 projects. But through the booms, a lot of exploration happened, and there was a lot of Australians that came into Quebec, and a lot of people didn't find anything. But you bought something, you drilled it, and it's become a really major discovery. So how did that acquisition? There's a way, it means to make money. Like when everyone's chasing the stuff, not everyone finds something like you have.
Fortunate, in the right place at the right time. I don't know. We had another lithium project to the north of us back in the 2022, 2023 when everybody was getting into lithium, and not many of those projects survived because they didn't have anything substantial. And that was our first project. It has lithium, but it's not going to make the cut in a bad lithium market. You need to have your cost down. And Cisco came along and we decided to take a flyer at it, and sure enough, it turned out to be a good bet.
And you have good geologists behind you as well who have scoured all of Quebec, and so having good geologists and having some luck and purchasing well in a counter-cyclical way is a means to make money. And you did something similar. You started the company only in 2023, and you thought that like all the lithium brines have already been discovered, but you actually have one of the highest grades out there. Like all the best things were picked off, we thought.
Yeah, we were lucky. And again, we took advantage of the experience that we got in the lithium space. Most of the salars or properties within salar were taken, and we tried to secure properties on the alluvial areas of the salar. trying to see, trying to use the experience of other projects that were exploring in the alluvial areas. And again, in 2022, where everybody was trying to search for properties that were not many, we were able to secure 140,000 hectares and put 3 projects in Argentina.
So I've been here a number of years, and I've watched ebb and flow of attendance and interest, and I would rate the interest and the people here as being relatively low, moderate to low, which is a very good contrarian indicator side for the bull market for lithium to come, because when it was filled, it was more like the top of the market. So take that, pay attention, because gold is hot, copper's hot, other things are hot. Lithium is warm, getting warmer, and a bull market's coming. And these are 2 very good projects that PIM is, maybe going to invest in one or both of them. We'll see. Thanks very much, Gabriel, PIM, and Alicia.